Okay, very good morning. Wednesday, 30th of May. Let's get this briefing underway. And obviously the main topic of discussion we're going to look at from a news perspective is Italy. What happened yesterday, what the outlook is really for today and the rest of the sessions coming forward for this week. A new date tabled as well for when a potential Italian election could occur. So we'll have a revisit on that information as well. So first off, what's happened in Italy? A couple of charts to run you through. Obviously the catalyst being this push for a coalition government between the Five Star Movement and the League. The presented kind of finance minister, which was rejected by the Italian president at the weekend, this causing a complete breakdown then in the current, or what was then the current formation of the coalition government and their proposals, bringing renewed risk off activity across the asset classes. This then saw in yesterday's session, as we returned from the long weekend given the bank holiday, Italian political worries saw yields shoot higher. So what you're looking at here is the Italian 10-year bond yield rising incredibly sharply, but that's nothing in comparison to the more short end in the 2-year. But other things that we've had is, if you thought the risks, to put it in some perspective, around Turkey were considerable in recent weeks, well, if you're looking at the 5-year CDS, which is the credit default swap, so your kind of insurance in case of a default, well then Italy, given the sharp spike in this white line, spiked over Turkey. So it's more expensive to insure yourself against a default in the case of Italy than it is Turkey, which I find absolutely incredible. But certainly it was almost the move yesterday, I think, was it almost became to a point where it capitulated and everything just went a move in the 2-year yield. I think it went 100 basis points, then another 100 basis points, which is really unprecedented. And if we start having a look at, I think it was the 2-year yield, this is what it looked like yesterday. So even going to 1%, I think, was a multi-year high, and then it jumped again another 1.5% on top of that. This dwarfs the type of movement in an intraday move that we saw back in the midst of the European sovereign crisis back of 2011, 2012. So, you know, absolutely big movement yesterday. But if we have a look at a few other things, and then I'll give you my kind of take of where I think this goes from here. But firstly, the FTSE MIB obviously under some pressure. In fact, the FTSE MIB touching a 13-month low. We're now down about 7% in the last week alone. Intesa and UniCredit, two of the biggest bank stocks. So there's 40 companies obviously in the FTSE MIB, their local stock index, of which Intesa is the biggest. UniCredit is the 4th biggest, so quite dominated by bank stocks, of which those two companies alone comprise of just shy of a quarter of the entire FTSE MIB index. So they've obviously been sharply hit. The bank stocks incredibly sensitive to these political developments in Italy. But what we have seen this morning is a bit of stabilization. So Italian stocks off to a firmer start after the day of turbulence that we've had. And if you read our strategy report that we sent out yesterday, I actually think that, you know, this stabilization after this kind of almost snowball effect which we had yesterday is warranted, because what people are talking about now is the latest being that Cottarelli, which was the former IMF director, which was appointed by the president yesterday to push forward to try and formulate a new government, has failed thus far. But the point being is that I don't think that this is going to progress anywhere near quickly, i.e. we're going to go into a period of just political kind of a stalemate, which means that we'll probably likely have several weeks, if not months, of this kind of negotiation behind closed doors of trying to piece together what exactly they're going to do to form a government. And the latest obviously being yesterday we heard a potential new election could occur. This is obviously what's spooking the markets, because does that then, if that were to materialise, equate to a more kind of solidify a more Eurosceptic view, and does that bring back onto the table the fear of an Italian exit again from the EU, which was obviously something in focus several years ago, and that's what the market's worried about, hence the rise in the credit default swaps and the spike in yields and the weakness in euro that we've had. The point I'm making here is, though, even though the latest overnight has been that Italy now may be headed for a July vote, so that September's been pulled forward. So what happens here is, if Cattarelli fails to form a government, then essentially the president could dissolve parliament, which would then technically mean that there needs to be fresh elections in 60 to 70 days in terms of the specific timeframes. However, I just think that this timeline being further out down the line just means that the pressure cooker, if you like, of what we saw yesterday just dissipates slightly, and this is going to be a fairly drawn out process. So I think after yesterday's move, we are going to have some rationale return to market activity, and we're even seeing that this morning. Euro is moving back higher, coming back up to the high print that was seen really late yesterday afternoon, so it's reversing some of the quite sharp sell-off it had yesterday. European equity markets also recovering somewhat, as are US index futures. The Bund also down 64 ticks this morning, and also lower in the US 10-year by nearly a full point. So again, I think this is certainly something for sure to monitor, and it has jumped up the pecking order of the global macro themes that are driving and influencing market sentiment. The only thing I'm saying is I think yesterday was a bit of an overreaction, in my humble opinion, and I think that now we will steady, if anything, reverse, because I think people will kind of reevaluate and see that this isn't like a cliff edge scenario that's automatically going to domino effect in an immediate fashion. This is a lot more drawn out than that, and I think even if we do have new elections, we're talking about months away of that actually occurring. So one of the things, though, to keep aware of on the short term is there is actually Italian bond auctions today, and anyone who traded through the European sovereign crisis will know that bond auctions back then were incredibly important, because it gave you a real snapshot for foreign investor appetite to buy these various, what were deemed then the next potential casualties of the sovereign crisis, that being obviously Greece, Ireland, Portugal, but then we would look at the kind of bid to cover ratios, how much demand there were to buy people like Italian or Spanish debt. And so later on this morning at 10 o'clock is when the actual auction takes place. The results usually come about 10:30 a.m. and we're looking at 5-year and 10-year offers today, which are going to be in particular focus. So these are multiple billions of euros. However, one thing to be aware of, if you're expecting these bond auctions to just come under some scrutiny and potentially, see a lackluster demand, well, there is some technicality to today's process, because there is a bond redemption of about 18.5 billion euros due on Friday. Intesa Sanpaolo, which we've just discussed is the biggest company in Italy in terms of market index weighting, is the largest investor in that security, i.e. the bond redemption, and domestic lenders typically reinvest maturing proceeds. So are they just, because of that redemption, going to have to pick up this latest auction? And so by default then you're going to have this kind of natural rollover of demand in that kind of management of the debt that they hold at the moment. Italian debt is set for its largest month-end indexed extension among European peers, according to Morgan Stanley, which should see passive index investors rebalance their portfolios. So something to just be aware of, although it's quite, I guess on the surface, tempting to just say, well, these auctions could be important. Just going to be potential failure, this redemption flow might well mitigate that risk in that sense. The other thing, of course, talking about Italy is, well, if we were going to have another vote at some point in the future, and if we were talking about a more Eurosceptical view forming in Italy, which I guess from what we've learned in politics, and this is yet to be seen, I guess, in the case of the UK, is that the more drawn out these situations become, and that the longer we remain in this kind of stalemate with no real credible solution, the more frustrated generally voters tend to become. And does this then further fuel this anti-establishment view, i.e. the prospects of a Eurosceptic opinion, really reflecting in public discontent? So a couple of charts here the FT have put together, and this is looking at how Eurosceptical are voters and looking at the Italian political crisis. And they're looking at a couple of infographics that I thought I would just share. And this is looking at the Italians, the most Eurosceptic among the citizens of the Eurozone, according to the latest Eurobarometer survey. So if you look down at the bottom, there's Italy. Let's not forget the fact that Italy is still more on the balance in favour of having a more positive view on the euro. The point is, though, it's the least positive of every country in the Eurozone. So as you can see here, the number against and not sure here. So the darker blue is the least of all of these countries. So the most positive on the euro, Slovenia, Ireland and Estonia at the top. Some of the other things, though, to really mix this up, is Italy, positive view on the euro, the percentage population in for a European economic and monetary union with a single currency, that's actually been rising. And so somewhat counterintuitive to that previous graphic. The other one here is your country, could it be better? Could it better face the future outside the euro? And as well, some 54% of Italians feel they are citizens of the EU, which is the second lowest proportion in the bloc, only after Greece. So, and this one as well, how much do you say would your voice count in the EU? Well, if it's Italy, it's one of the lowest amongst the major 6 leading EU economies, i.e. fewer than 1 in 3 Italians feel their voice really counts in the EU, the lowest of the 6 major nations of France, Germany, Spain, Netherlands and Sweden. So there certainly is this underlying kind of sentiment in Italy, and this obviously played out in the hung parliament we had back in March. The fact that the Five Star movement was the biggest single party by representation of the public vote, followed by then now trying to team up with the League, certainly would suggest that. The only problem here, I guess, is much like many other European and even our own country, is the fractured nation of the split amongst support across different political parties. The problem you have with Italy, and particularly given their new law with their election process, incredibly difficult to get an outright majority. And so what typically happens then is you go into a government where you're trying to muddle together lots of different political views, and ultimately very little gets done because there's very little support behind a coordinated proposal of efforts together. So yeah, this needs to be watched, obviously, closely. But what I'm saying is that in the short term, I think it wouldn't be surprising for me, and I think we're already seeing that this morning, to see a decent recovery once the market settles itself. So euro dollar back to pivot already now this morning, and I'll leave the charts technically for Sam to review in a second. All right, one of the other stories I just wanted to bring up was this. Obviously, people in the UK's kind of, I'd say, fallen down the pecking order of these kind of topics, at least for the intraday, because of the renewed political uncertainty emanating out of Europe. So not just Italy, but also Spain as well, with that vote of no confidence due on Friday. But looking at the UK, inflation is obviously a big key to the puzzle as to what will the Bank of England do in the future with their monetary policy. And inflation, as we know, has been dropping quite quickly from 3.1% we had a few months ago all the way down to I think the level 2.4% now on the year-on-year. One of the things that came out last night, which was quite interesting, was that British shop prices, as measured by the British Retail Consortium, fell in May by the most since the start of last year. So inflation overall continues to drop at quite a rapid pace at the moment, adding to signs that the rise in inflation after the referendum has peaked and inflation is continuing to drop off. One of the interesting things here, though, is that there's a bit of a divergence because prices of non-food items fell by the most since August 2016. They were down 2.5% year on year, but prices of food inflation actually picked up 1.2% from the previous month's 1%. So it's actually food prices which, if anything, are still moving higher, but overall everything else is moving lower. The question here then is that how long will food prices remain higher? Well, analysts at BRC suggest that while food inflation's increased this month, that's mainly due to the weather, oil price and other geopolitical factors having influenced global agricultural markets. And the view is then that after that, this kind of peak that we're going through on that specific point, then even the food prices will start to drop. And so inflation conditions then you can expect over the medium term to continue to decline, which obviously fits within this Bank of England view we had in the previous QIR where they downgraded their inflation outlook. So a bit more broader UK economic context there just to be aware of. Okay, quick look at the calendar for today. We've already started to have a couple of comments from Italy this morning. So one that just came out about 8:30 this morning. Italy's 5-star in the league are trying again to form a government, according to officials. So for sure, you need to keep an eye on your news feeds and ear on the squawk. Just seeing tweets coming down that Italy's Cottarelli ends meeting now with the president. So let's see if he makes any statements at all in the interim period. Also, we've got the German state CPIs. German state of Saxony is the only one that's come out thus far. More to come at 9 AM. The month-on-month 0.5% against the previous 0. The year-on-year 2.2% against previous 1.6. So a slight pickup from the prior month. Otherwise, looking at the calendar for today, aside from the various German state CPIs, you've got the German unemployment rate and change that's coming up momentarily, and then you've got in the late morning the various sentiment and business climate indicators coming out of Europe, but the main one here is going to be later ADP and national employment, this being the typical front runner for non-farms, which we'll get on Friday, this being the private payrolls measure. But again, just to give you some context, I really feel like non-farm payrolls is a bit of a non-event. In reality, the job creation side of the US economy, I think, is fairly consistent at a robust level, and ultimately, same case as it has been for a number of months. It's more to do with the performance of wage growth and its subsequent impact then on inflation expectations. It ultimately is key. So ADP certainly warrants monitoring, but I don't think you're going to get this catalyst trigger event for market sentiment, especially not with the European political narrative driving market sentiment at the moment. US GDP, though, does come out, this being the second estimate, so that's probably the more interest. That'll be at 1:30, so quick succession for those numbers this afternoon, ADP then GDP. That will come alongside the core PCE numbers and US trade balance, so a real batch of data coming then. Later, you've got the Bank of Canada rate decision, so all analysts are looking for unchanged here, or actually no, there is one looking for a potential hike, so there is a range high of a 25 basis point increase, but the consensus is for a hold. Just having a look at a couple of comments this morning from some of the major banks. Crédit Agricole, they're saying, and this is pretty much reflected across other views, that they expect the BOC to leave rates on hold. They believe they'll wait for more economic data in order to confirm the validity of a rate hike, and also, therefore, given that the meeting will not be accompanied this time by a press conference or any economic projections, they anticipate the market impact may prove limited. So that's for the Canadian rate decision. And then you've got the API crude oil inventories later on this evening. Those obviously a day later than normal, owing to the Memorial Day holiday we had on Monday. So the DOE numbers from the US government energy department will be tomorrow afternoon. Speaker-wise, pretty quiet actually this time round. But the Italian auctions, just to keep an ear on when the results get announced on the squawk, they should be around 10:30 when it hits the tape. Okay, hand you over to Sam, and I wish you a good day. Thanks, guys.
Hi guys, good morning. Just having a quick look over at the dollar, actually just coming under a bit of pressure, and you're seeing, if you look at the top two left screens of the chart, you've got euro just pushing above the pivot, and pound to the high of the day. Bit of resistance coming up, and I was going to start with the euro, but might be worth keeping an eye on that pound with the resistance from yesterday, similar to the euro actually coming up to that point now, previous sort of low that we had yesterday, just sort of testing that area. I'm going to put this back onto a weekly chart. It was sent out in the strategy report from Anthony yesterday, and you can see, if I just put this trend line on, yesterday we had a couple of tests of this point. Let me just get that drawn on, and you can see going back to 2015 we broke through it last year, came back for a bit of support at the back end of November, and then yesterday as well. So decent trend line being respected. If we just lower that time frame down to 60 minutes, you can see we had a few tests of that, and quite an important rejection higher. So, you know, by no means is this me calling the low for the year or the time being, but important point nonetheless for the euro, where it found significant support. Resistance wise, if we have a look at that low from yesterday before we did break down, that's just offering a level of interest as we speak. The push lower coming into the early morning yesterday. So bit of resistance above that, using the higher point just above 116.5 for euro. If you're still looking for that continuation to the downside, if we were to get through there, then I think it's just going to get quite messy. Initially, the first sort of real test of the pivot in yesterday's high it wasn't too bad. You can see a decent sort of pullback here, but since then, with the dollar weakening as well, it's just having these markets just push a bit higher, and you can see pound in a second when the chart loads up. You'll see how that has just pushed a bit higher to its similar kind of resistance point. There we go. So you've got quite a key level for the pound, just a bit higher than the 133 that it's just found resistance on. So that would be the main area that I'd be looking at, not just because of the high from yesterday, but also 29th, 28th and the 25th, all around that level. In terms of the continuation, if you do feel the dollar weakness is the main sort of driver for the day, and you're looking for a continuation of these moves to the downside, again, it might be worth just having a trend line drawn from the lows that we had yesterday and into the morning, and sort of seeing that break down. And recently it's worked quite well for the days where you're actually seeing a bit of a retracement, and you just want to wait for the confirmation of that move to the downside. Look over at Aussie dollar, which as well just pushing to the higher point of the day. A bit of resistance just above the pivot. It was a pretty tricky one, I think, yesterday. The Aussie dollar it came down to the S2 a couple of times. It just really didn't want to break through until really the back end of the session. But now, yeah, just seeing a bit of a retracement up towards that pivot. So worth keeping an eye on that pair, as well as the dollar just coming under a bit of pressure still. Dollar yen pivot has held quite well here to the downside. Obviously, this market for the last couple of weeks has been coming down, so you'd be looking perhaps at a trend line sort of forming there. In terms of support areas to the downside of this market was just to continue a bit of the sell-off that we have seen. I think still the key level of, let me just get this chart on a longer time frame. The key sort of area that we sort of had a half breakthrough this morning, tested there, S1 not too far away, and then where we really started to push on, but on the 23rd, the back end of April, wouldn't seem too far away if we were to get a confirmed break lower. So those would be the areas to the downside that I'd be focusing on if we were to see a continuation of that. Again, worth probably having a bit of a trend line on using the lows from the day that we've already had if you are to see that come through. Let's have a quick look and see if we can get a trend line on this. So yeah, price just getting squeezed in for the dollar yen, as you see here. So for euro and pound, I would still favour the market to come down a bit lower, a bit later on, and it might well be that you only really focus on it when it does come a bit lower for the pound with that trend line that we talked about. But as the dollar is weak, you know, I wouldn't necessarily want to be looking to sell at these levels right now. Equities, which pushed lower quite strongly yesterday after the cash open, only just to bounce into the close. These markets, the direction is tricky for sure. It broke out of that range that we had been in. Let me just refresh that chart. Let's put it on a 240. So again, this would have been sent out in the strategy yesterday. The range, you can see how well respected the high was. Bit of a break yesterday, and then finding a bit of support, having broken through these previous highs from the back end of April and early May, and now we're back up to test what was the bottom end of the range of the last couple of weeks. So technically important point, can we get a push above here, and if we were to, where could it go? Obviously the sort of the higher point from just after the cash open, and then you've got some other resistance levels to be interested in. I think for the continuation to the downside, if I just get this trend line on, similar for the euro and pound, it might be worth having this on and see if we can get a break of that trend line going from yesterday's low to today's low, and then focus on those lows as actually profit targets. Ideally for that trade, you would want to see that in the afternoon, a bit more volume, and that will go same sort of trade opportunity for the Nasdaq as well, and the Dow Jones. You can see how we've just been trending higher since the close of yesterday. So if you're going to see a continuation to the downside, you would want to see that level break as well. Gold and oil, just to wrap things up, let's have a quick look. You can see yesterday, and it wasn't just yesterday, you can see if I highlight here on the 23rd, you get a push higher, really sharp push higher, and a really sharp push lower, all in the same day, and exactly the same for gold. It's a mess, to be honest, at the moment. Bit of a range that we're in. I would say safer to wait for a breakout of that, or if there's a data release or perhaps a comment that suggests otherwise. I think this market is best left alone for now. It's a bit too choppy, as you see, really sharp pushes, and the majority of these moves were happening in sort of 1 5-minute time frame. So market a bit choppy. I would prefer to see a break of the high of last week, or I don't know, maybe a push below the S1 and go from there. For oil, more conservative after Friday's push lower, again perhaps a bit range bound. Obviously the API out this evening, and then the DOE tomorrow, so maybe not a bad idea to wait for the data before looking for perhaps a longer view for this market. In terms of where this range could go if it was to break, let me just put that back onto a 60-minute. Yesterday's high, you got R1 just above, and before that, the previous sort of low, the 25th. From that breakdown to the downside, obviously got quite key levels of support. $65 today on today's S2. Below yesterday's low, we have the low of the 17th and the 10th that I would want to be aware of, just in case we were to get a further push down for that market. Just have a quick look over the DAX this morning. Obviously another sort of sharp day to the downside yesterday, and you can see just trying to push, well, sort of repair some of that, and we're just pushing above the pivot now to the new high of the day. So worth keeping an eye on the DAX here. yesterday's afternoon high that you see around 1 o'clock, not too far away. And it'll be similar for Euro stocks as well, just coming up to the higher points. But yesterday's high, as you see here, not too far away at all. So dollar weak for now. Euro and pound just finding a bit of resistance near those levels. Euro at the point we were talking about where we saw the push down. So one to keep an eye on out of the two. Pound a bit of room to go to that high. In terms of looking for continuations, I would say preferring a move lower to then sort of join the party. Equities in the US near the higher levels of the day, but choppy, and resistance levels just a bit above. Gold, I would say leave alone, or if you are going to get in a shorter term trade, maybe slightly more favourable. Any questions, obviously get them in the chat, please. If not, I hope you all have a good trading day.